Welcome and thanks for joining us on episode number 243 of the Financially Independent Teachers Podcast. If you think your story could help other educators and you'd be willing to come on the show, please check out our webpage at financiallyindependentteachers.com and fill out the form to come on the show. Guys, we are in for a treat today. We normally interview teachers all across the country. It started in North Carolina. It expanded. We've even had teachers all over the world that have come on the show. We've had Dave Ramsey's daughter on the show. We've had all of his personalities. We've had multi-million-dollar teachers, even here in North Carolina. We've had teachers that came on the show to talk about regrets of how they wished they would have invested in the state 401k pension, or excuse me, state 401k investment plan in addition to their pension. But today, our show is a little bit different. We actually have an elected North Carolina official, one of the highest elected officials in the state on the show. And we're going to do a two-part episode. In this episode, we're going to learn a little bit about Brad, our North Carolina state treasurer, and then we're going to talk about the North Carolina pension. We're going to talk about healthcare in North Carolina, teacher investments, and then the state of education in North Carolina. So I've got all my notes here so I don't mess up. But Brad, I want to welcome you to the show. Thank you so much for being willing to come on and talk to us at Financially Independent Teachers.
It is my pleasure. Thanks for having me.
Absolutely. Thank you so much. So let's get right into this thing really quick. Before we get into all the things that teachers want to hear about, pension, healthcare increases, and things like that, can you tell us a little bit about how the heck you ended up on a fit podcast? How did this even happen? Because this is not a political episode at all. I didn't reach out. I'm not active politically, locally. I didn't meet you at anything here in Onslow County, a Republican meetup. How did you find us?
You speak my language, right? Financial literacy and financial intelligence underpins so many people's happy lives that it just deeply resonates with me. It goes way back to my childhood. But for me, anyone who's spreading the gospel of financial literacy is a natural ally. Doesn't matter, political affiliation or anything else. This is good for everybody. It helps people get the goals that they want in the long run. And so we're here to support it. It's pretty clear that my whole team is available to do things like this however we can.
I love the transparency, and your team, by the way, has been awesome because I had to reschedule. My son ended up trying out for the wrestling team here at Northwoods Park Middle School in Jacksonville. Had no idea he was ever going to try that. So when we had it scheduled before, he ended up having a match. So I appreciate your team and their effort. So tell us a little bit about your family and how you got to North Carolina, how long you've been here. I know you're a big Tar Heel guy.
Yes, sir. So I grew up in Dallas, Texas. I'm the youngest of four boys of older parents. Both of them grew up in the Great Depression. So that was ever present in my house, right? These things can happen and they can be really bad. And so those dynamics were in play from the get-go. But then a little bit later, I was young, but my older brothers were older. My dad was the primary breadwinner. My mom took care of us, and he lost his job. And I was 5 years old at the time. I had no idea what had just happened, but I felt it, right? As everybody does when they go through tough times like that. You just feel the tension in the house, and you feel the choices that you have to make and the sacrifices that your parents are making for you. And you go look at the Christmas tree on Christmas and there's one present under it and things like that. And I know a lot of people listening have lived through times like that. And we all take those tough experiences and make something out of them. And hopefully it's a really positive thing. And for a lot of us, it is. And for me, that was a commitment to never let that happen to my family. What that meant at 5, 7, 9 years old is obviously different than what it means at 48. But it really lit a fire under me to say, that's not happening in my family. The story has a happy ending, of course. My mom ended up going to work at the school. And so that ended up being how we made it all work in the long run. And then my dad became an investor. So the combination of wanting to make sure that I took care of my family with my experience and watching my dad become an investor led me to the career that I've been on ever since college. But yeah, I came to North Carolina for college, was blessed to win the Morehead Scholarship, and came down here then. And as we were talking about before the show, met a girl, and the rest is history.
What are your favorite parts of North Carolina now that you've been here? I'm guessing, 25 plus years. Are you a beach guy? Are you a mountain guy? What's your favorite thing to do, or do you love all of it?
Yeah, that's the stereotypical political answer, right? I gotta say I love all of it, but the truth is I like the mountains more. My wife's from up there. I grew up in very hot, very flat Texas, so the mountains are just so different and so engaging in that way. North Carolina is a blend of so many things. And so I've lived in Texas. I went to business school in Massachusetts. I went to high school in New Hampshire. I spent a lot of time out of this country, and you keep coming back to North Carolina because it is an amazing blend of so many things, full of so many amazing people.
I mean, even just our barbecue, right? You have multiple different types of barbecue depending on which part of the state you're in, from Eastern North Carolina barbecue, which shocked me the first time I ever had it, because
Sure.
I'm not really a vinegar guy. And I remember the first day of school as a young 22, 23-year-old teacher, they're like, hey, we've got Smithfields to cater this barbecue. And I'm like, man, I cannot wait to have barbecue. Being from the Midwest, I took my first bite in and I spit it out. I was like, what is this? And I was like, that is disgusting. But now I love it because I've been here
Sure.
20 years and it's an acquired taste and it's awesome. So you love North Carolina. I love North Carolina. It's a great place to raise a family.
Sure is.
I don't know what your wife is like. I married a North Carolina girl like you do, but I asked her, what do you like better, the mountains or the beach? If we could have a vacation home in one place, which one would you rather have? And her answer is, why can't we have it all? Why can't we have one in the mountains and at the beach? So
Sure.
maybe I'll be teaching till I'm about 80 years old for that. But what got you excited about personal finance when you were a Morehead scholar at Carolina? What would you say you're on a scale of 1 to 10? What was your financial knowledge of, say, the S&P 500 and the market? And I know index funds and mutual funds were getting a little bit more popular then. Where were
Sure.
you then? And could you ever imagine yourself being where you're at now?
So I was not a really cool teenager, and I had started investing in stocks at the age of 14.
Wow.
So for me, and, a single share here, a single share there, but you learn a lot by doing that. That was also back when the commissions were more than the stock prices in some cases. So it was a little harder. It's a lot easier now with all the accessibility that we have and commission-free investing and things like that. So I grew up watching Wall Street Week with Louis Rukeyser on Friday nights at the dinner table with my dad when he became an investor. So to say that my family is knowledgeable about investments is probably an understatement. We probably need more hobbies than those, but I guess it suits being a treasurer.
That's awesome. I tell my students all the time, I don't know if there's ever been a better time to be an investor because one of the first days of a class, I'll say, hey, who here has a cell phone? And they'll pull out their cell phone. I'll say, who here has Cash App? And almost every kid has Cash App. I said, I'm not endorsing Cash App, but if you pull up Cash App, you can go to invest. And even at a young age of 13, you can invest on Cash App and you can buy the S&P 500 VOO from Vanguard or
Yeah.
VTI or
Yep.
VTSAX. And I said, you guys have the ability. And a really cool thing is you can buy fractional shares. If something costs $250,
Right.
they'll let you invest as little as $5. And it might take a bunch of $5 investments, but one day you're going to own a whole share of that. So what a time to be an investor. People love to throw out the word inclusion these days. And I don't think ever been a more inclusive time for people to get their hand in the stock market and build wealth.
It is easier than ever, but that also makes it intimidating. There's almost too much choice at some level,
True.
where I recently read there's more exchange traded funds than there are stocks now. So
Wow.
combining stocks together into an exchange traded fund makes so many more choices available that it can become really intimidating. And the industry, in an effort to try to sell you advice, wants it to be scary and intimidating. But there are so many low cost, simple ways to be an investor over the long run that are proven that we advocate for over and over again because they're easy to stick to.
Yeah, I just had an episode recently. My episode was, do I believe, it was just me, do I believe that a teacher, even a North Carolina teacher, can be a net worth millionaire over the course of a 30 or 40-year career? And I truly believe that. I interviewed a
Yes.
couple from Swansboro, North Carolina, a husband and wife math teacher duo,
Yeah.
and they didn't have any inheritance. But they did AP testing. They had national board certification. They did everything they could, coaching, athletic director stuff. And by the age of 50 years old, even with a couple of children, they became net worth millionaires in Swansboro, North Carolina, even off of a North Carolina teacher salary. But the key was they limited their student loans. And immediately at 22 years old, they each opened up a Roth IRA and they started making just little contributions. And as they got raises over time, it's just amazing what the tortoise can do versus the hare of going out and trying to be super aggressive and do all these crazy things. by 60, they'll probably be worth $2 million when you look
Sure.
at the rule of 72. So it's awesome what this can do. Let's talk about your job as the treasurer
Sure.
because
Yeah.
I taught civics for 15 years in North Carolina. And even in an honors class, sometimes I'd have kids that they didn't know what the Atlantic Ocean was. They couldn't find it on a map. I'm like, guys, you went to Atlantic Beach this summer. You went to North Topsail Beach in Emerald Isle, but you didn't know which ocean you're at. Even adults, sometimes we struggle with that stuff. But if I were to quiz 100 people, I don't even know if 25 of those 100 in North Carolina would know what the North Carolina treasurer does or who it is. Can you tell me from like a macro perspective, and I wouldn't know 10 years ago, what you actually do?
Simplifying it greatly, I protect the state's money and I try to grow the state's money.
And how
That's
much
it.
money is in this state fund? I know you're managing the pension. There's a lot of money in that pension.
There's a lot of different pensions, there's a lot of different funds, there's a lot of different things we do that get back at protecting and growing the state's money. The big pension system, which is the long-term support for everyone's pension payments over time, is about 140 billion. And then with all the other accounts that we manage for all the other things that we do, it's a little bit over $200 billion of the state's money that we manage.
How does that weigh on you? Obviously, I'm sure you have a team and there's checks and
Sure.
balances, I would think, in there, but how
Yeah.
does that weigh on you when you know that we've got 10 million plus people in our state and they're counting on that pension? We've seen other states where they've had some issues with their pensions and what people thought. My dad worked at General Motors for 35 years and his pension was gone and it went to what is it, the
PBGC, yes.
PBGC. So
Yeah.
he's getting some of that money back, but it's nowhere what he was promised. How heavily does that weigh on you to know that we're going to be taking care of his teachers and other state employees?
It is what I wake up thinking about just about every morning. Uh, the obligation that I have to make sure that that benefit is there for our state, for our teachers, for everybody who's paid into it and is paying into it. I think there's some good news here. First is that the $140 billion is a lot of money, but it's not the only thing that protects your pension as a North Carolina state employee. The taxpayers do too. So there was a lawsuit 40 years ago about this that made that very clear that pension benefits are not just an obligation of the pension fund. They're an obligation of the entire state too. So as North Carolina employees, you should feel very secure that the 1.82% times your number of years times your average final salary is going to be there for you into the future, come what may. But I've got to make sure that it grows at an appropriate rate so that we don't ask the taxpayer for a lot more because we're asking them to match 17% of salary right now, which is a big number. And so that we can ultimately reward retirees with cost of living adjustments too. One of the big challenges for our state has been investment performance. Uh, it seems esoteric, but it really matters in making a pension system healthy. We have been telling people that we would make 6.5% for years, and we've been making 5. And 1.5% each year times $140 billion is a whole lot of money. And that's got to come from somewhere. It comes from the taxpayers, it comes from the retirees in the form of not giving them cost of living adjustments. So, yes, how much does it weigh on me? The worst calls I take here by far are when a retired state employee calls me and says, I can't make ends meet. There's been a ton of inflation in the last 10 years, and my pension payment hasn't kept up. Whose fault is it? And the only answer is it's the Department of State Treasurer's fault. And we're working on fixing that. And we're having a great year doing it, but we've got a ways to go.
It almost sounds like quarterback. I'm a big sports guy, and
Yeah.
whether you win or lose, people give the quarterback all the glory when things go well, and when things don't go well, even if it isn't your fault. And there's other factors, of course, with the economy and different things like that. Ultimately, the treasurer is going to be the one that takes that blame. So it sounds like your goal is to get those returns over the 5%. Is your goal 6.5%?
Yes. So, I was asked the other day, why not just put it all in the stock market? It makes 10 or 11. Well, we can't do that because the volatility of the stock market would lead us to potentially running out of money in certain scenarios. And we just can't take that kind of risk. So the goal is to make 6.5, maybe a touch more at a low level of risk. not to, go for it and be all stocks all the time.
Gotcha. Okay, so we're getting ready to break into our four main parts here. And on
All
episode
right.
one, we're going to talk about the pension, which we've already kind of gotten started on. Then we're going to talk about healthcare. And for
Yeah.
the second episode of our show, we're going to move on into North Carolina investments and the state of being a North Carolina teacher. So let's talk more about the pension. I think
Yeah.
that is a superpower. I think a lot of North Carolina teachers don't realize how powerful it is.
Yeah.
I've run the numbers for my pension. Obviously, it's based on your highest four consecutive earning years in a row. We
Yep.
don't have a rule of 85. There's a lot of different things out there that people say we have that they don't. I've
Yeah.
even seen people say, "Hey, I can't believe they got rid of the pension and new teachers don't get the pension anymore." That's not true. We
That's
still have
not
a
true.
pension. You can go on there. It's really easy. You can come to one of my workshops and I'll easily
Yeah.
explain it to you. But my pension, my gross pay, should be around $40,000 a year. And whenever I talk to financial people that come on our show, financial advisors or experts in the space, they're like, "Do you realize what $40,000 a year guaranteed is?"
Yeah.
And then they immediately go into the generic Trinity study and the 4% rule that,
Yeah.
someone in the private sector would have to have $1 million in their portfolio
Yes.
to have and pull out 4% each year. That's $40,000 a year.
Right.
And I've even heard attorneys talk about this. I was at a Christmas party one year at a teacher's friend's house, and his wife was high in business, and there were a bunch of attorneys there. And they're like, "I'm jealous of you." I'm like, "Jealous of me?" They're like, "Yeah, because you're a North Carolina teacher." I'm like, "What?" They said,
Yeah.
"Yeah, we have to save everything for our own retirement. We have nothing.
Yeah.
Like, you're going to have health care, you're going to have a pension. We don't have any of that stuff." And they said, "Yeah, we make more money, but I'm really worried about my 60s, 70s, and 80s, how I'm going to make it." So our pension is a great thing. And
It
I
is.
wish more teachers knew how valuable that pension was. But if you were to rate our pension system on, again, this is elementary stuff, 10, being the best that it can be, one being we're in really, really bad shape. How healthy would you say our pension system is right now on a scale of 1 to 10?
We're at 9. And I get there a couple different ways. First, we look at what's called a funding ratio. Funding ratio is how many dollars do you have to cover how many debts you have. So in the pension system, we have $140 billion. The total payments we're going to make to all state employees up through the end of last month into the future projected is about 151 billion. So we're short by about $11 billion. It's a lot of money, but as a percentage, it's not a big deal. So we're in the 90s as a percentage funded, as I think about it. The actuaries think about it a little bit differently, but it's ultimately the same thing. Most states are in the 80s or lower, and the lowest states are in the 40s. So in terms of feeling great that the money is there for you, well, 90+% of it's already there. So you know that it's in the account and waiting for your retirement when it comes. We administer benefits well. We send out hundreds of thousands of payments each month, and they get where they're going. Believe it or not, we still send out about 10,000 physical checks a month. It is an option that we provide that we wish people would not take because ultimately mail gets lost and, electronic payments are much more safe and secure and reliable. So from a benefits administration perspective, we do a great job too. Where we get a little bit better is on the funding ratio, and then we have seasonality in our call volume. So in January and in July, we get a tremendous number of people calling our system because that's when people retire. And we haven't quite figured out how to staff appropriately to make the waiting times in January and July more palatable. So bear with us, be patient if you're calling in January or July. Maybe if you can wait, call in February or August. But we're working on that too.
Gotcha. So we have a lot of people that are going to listen into this show that don't normally listen because they want to hear from you and they might not know much about investing or things like that. But on our show, I mentioned earlier, we talk a lot about low cost options. I love, and we're going to talk about in part two of the episode, I love the Empower plan that we have. We have great low cost options,
Yeah.
the large cap, small cap funds, international. It's great. I don't want to say it's free, but it's almost free when you look at what some of these other providers are out there. I think we've done a great job with that. But if you could break down like how the state's invested, if you were to look at a pie chart, you've got the S&P 500, you've got
Yeah,
international funds, cash. Can you give us a Barney style, like what does our pension look like as
sure.
far as how they're invested for somebody who might not know?
Sure. So we're one of the lowest risk pensions out there. A normal pension fund has something like 70% of their assets in stocks and uh, equity securities, private or public, and then 30% in bonds or cash, safe investments. We run about 55-45. So about 55% in mostly public equities, mostly indexed, mostly the S&P in the US. We have some private equities as well. And then on the fixed income side, we don't just own treasury bonds, we also own corporate bonds, and we also do a number of other things, loaning in the commercial mortgage space and other things like that. Uh, so 55% equity, that's mostly public equity. In the fixed income space, about 20% is US Treasury bonds and very high grade corporates. And then the balance is other diversified fixed income type assets. We own a bunch of real estate. So we own a number of different things. It's hard to simplify it greatly other than like 55-45.
I think that works great. Now, will that number, obviously, you've only been in your position now for not even a year,
Yeah.
if I'm not mistaken. Do you think the ratios will shift a little bit? Because I know you
Yeah.
said we've only been getting 5%. Are we going to be a little more aggressive on maybe a 60-40 or something?
Yeah, so we have been, and we probably will be. I think we are always responsive to market conditions. So for those who pay attention to the stock market, you'll know that there's talk of a bubble. Artificial intelligence is a powerful technology. It reminds me of early in my career when the internet was a first a thing. How it will play out, how it'll impact jobs, how it'll impact a lot of things, still to be determined. But the stock market likes to get way ahead of these things and get really excited about things. So we have not been leaning into the stock market. In fact, we've been leaning out because it's very expensive. And we can find other places to make our 6.5% rate of return. So recently we bought over $1 billion portfolio of loans to apartment complexes. Uh, Plenty of discussion around the housing shortage and how people need apartments. And so we don't worry about apartments being full. And we certainly don't worry if we're loaning 60% of the total value of the apartments. And we can make 7% to do that. So we've been much more tactical in that way this year. But that money that we're putting into the mortgages was sitting in cash before. So I don't think we're taking more risk by doing that, but we certainly are earning more return by doing it. At some point, will we be 60-40? Probably, but maybe not at this immediate moment, given where the stock market is.
Gotcha. I know there was a lot of talk that I'd seen on the news and read some articles that we were in a lot of cash, and it's like, what is going on?
Yeah.
I constantly get asked, I get to teach the economics and personal finance class, and I love it. It's making a huge difference. Back to back weeks, I've had young kids under 18 already opening up their custodial Roth IRAs,
Love it.
working at their job at
Yeah.
the local Walmart or Food Lion and things like that, which is awesome. I have a lot of kids asking me about crypto, and a lot of people are like the whole FOMO thing, fear of missing out.
Yeah.
This has been a hot button issue in North Carolina. I know you've been asked about it through the media.
Yeah.
They have passed in North Carolina, at least it passed the House. I don't know how it went with the Senate. You can give me an update on that.
Yeah.
The North Carolina Digital Assets Investment Act, opening the door to invest some of our state funds into digital assets like Bitcoin. Where do you currently stand on this? And is that something you're open to?
Uh, I'm always open to considering new investments, right? And I think you have to be. The investment market evolves just like any market. No different than being a teacher. You want to be open to new ideas and new ways to do your job. So we're always looking at new things. Uh, Going back to kind of the genesis of Bitcoin in 2008, if you remember living through the great financial crisis, everybody was rightly mad at their bank and worried that it wasn't going to exist. And you had a technologist who said, well, maybe there's a way to create a financial system that doesn't depend on banks, that doesn't depend on governments, that just depends on your peers and in a trustless, permissionless way. So this is where Bitcoin comes from. It's designed to get away from the banks, designed to get away from governments who don't always have the same motives you and I do about saving our money. And so I think Bitcoin has a place in the world as a result. It is not the only digital asset, of course. There are others that facilitate some commerce, and then there are a lot of others that are just memes or schemes, to be quite frank. So I think there's a little bit of nuance required in talking about digital assets. There's an underlying technology that's incredibly powerful in the blockchain, which will pervade anywhere that stores data over time. And you see that being adopted. But to answer the question, we have not invested in digital assets in the pension system. You get a little bit in the form of, Tesla owns some Bitcoin or
Right.
other things like that, but not directly. And basically, it's because it's not a suitable asset for the pension system in our view right now. It is incredibly volatile. In the last month, it's gone from 125,000 down to 93,000 Bitcoin itself. And we're trying to make 6.5 predictably. It doesn't really fit with that. That said, as a personal investor, I own it. I think it's interesting. I can tolerate the volatility, and hopefully there's more upside volatility than downside. But you have to always consider the suitability of what you're trying to do in the investments that you're making. They may be right for you and wrong for me, and vice versa.
Well, that's interesting. I never really thought of that perspective of you're an investor as an individual for you and your family and
Yeah,
children and grandchildren one day, but you're also an investor for the state.
yeah,
And it doesn't mean that those portfolios are going to look the same. They're a lot different, and everybody has their own unique situation.
they do.
Our friends to the south, down in South Carolina,
Yeah,
we're the real Carolina, though, right?
of
Um,
course.
they introduced a new option for their teachers. I'm not sure how familiar you are with this. In both cases, if you're a teacher there, you have two options. In both cases, the teacher is going to contribute 9% of their paycheck toward retirement. Teachers have the option to be a part of the traditional South Carolina pension system, or they can opt into a program similar to a 401k where the teacher contributes 9% and then the state will actually match them at 5%. Are you in favor of offering a more flexible plan like South Carolina, where we know that it's a much more transient job market than it was 30 years ago when somebody goes and works at their union job at the steel mill for 30 years and they walk away. And we know that North Carolina is a transient state. What do you think of offering a new plan? We know the military's offered like a blended plan now. It would be similar to South Carolina.
Yeah. I mean, as a first principles matter, I believe in individual liberty. And so when we can offer people options, that is almost always better than not. Uh, this is a trend in more than just South Carolina. So Florida did this 15 years ago, and you've seen other states move down this road to exactly your point. If we're providing a benefit to people that they don't value, then we need to think about whether there's a different benefit that they would value. And for a short-term teacher or other state employee, the defined benefit system, the pension system, doesn't really do them much good, particularly if you're less than 5 years where you're just getting your contributions refunded. So if we created an option, but not an obligation to be clear, of course, that would be interesting. You'd want to think through a couple second order effects, though. The first is how do you make sure that people aren't completely speculating with it and therefore a risk of total loss? And I think you can do that in investment selection uh, as a principal matter. Then you want to think about, our current 401k and 457 programs, we allow loans against those programs. If this were your only retirement account, would we allow loans of your entire retirement account? So there are things you want to think about just to make sure that people have that nest egg when they need it. If we wanted to consider this would be a multi-year project that we would want to talk to everyone about before we create that option. But first principles, it would need to be an option, not an obligation.
I know that it would help a lot of people where we're at because I'm down here in Jacksonville, home to Camp Lejeune, of course, and we have so many
Yeah.
military spouses
Right.
that they'll teach in North Carolina 6 years, but then they'll move to California, then Virginia, then they
Yep.
come back, and then they never really are going to have a good pension. But maybe if they had the 6% coming out of their paycheck and then maybe a 6% or a 5% match,
Right.
and it could go to a 401k to could then transfer to their traditional IRA or something, that might be a really good benefit for them. One of the follow-up questions I've had from other people, and I don't know the nuances of this, is some teachers have been concerned when I offered that as an idea for our state. They said, well, how would the people that are teaching now that are going to retire one day, how would we have enough money in the pension?
Yeah.
Because now those people aren't contributing to the pension fund. I'm sure that's another a hurdle that we'd have to get over.
It is, but in the 90s percentage funded already, it's a smaller hurdle. And there's math there that you can figure out. The state will make them whole, without a doubt. Again, it's a legal obligation, going back to the beginning of the
Right.
conversation.
Right. That makes
That
sense.
it can get really complicated. Florida as an example, because we've looked at this. Florida, you choose when you start working for the state, defined benefit or defined contribution. And then I believe it's 10 years in, you get an option to swap. And you think about, all right, I thought I was going to be there for 3 years and now I'm there for 10 and it looks like I might be headed towards 30. I want to go from my 401k to the defined benefit plan. How would you do that? Could you do that? And the reverse is also true. So there's a lot of nuance to think through in making sure you get it right to create options and also make sure you prevent disasters.
Right on. That makes sense. You talked about this earlier, and I know we've been getting about 5% as a return. You're looking to get up to the 6.5%.
Yeah,
Not all, but many states where teachers retire, they do get cost of living increases.
they do.
They get that COLA.
Yeah,
We don't have a guaranteed cost of living increase. So if I retire as a North Carolina teacher, which is my plan,
yeah,
there is no guarantee that I'll ever get another raise.
correct.
So maybe $40,000 a year for taxes and healthcare sounds great. But when I'm 75 and it's still only $40,000 a year, do you think that that's something that you would like to guarantee that there's a cost of living? And how do the cost of living increases work now? Because they do happen occasionally.
They do happen occasionally. So, we've been in the 80s and as low as 80 percent funded. So the first thing you want to consider when you consider a cost of living adjustment is you're adding to what you owe, and you're not adding to the asset side. So it makes your funding ratio worse, and which means you just owe more money over time. So since that funding ratio has dropped, it was over 100, by the way, in the year 1999, and it's dropped kind of linearly since then, to 80 2 years ago. We're back in the 90s now, we think. That's the first thing that you want to make sure that you understand when you look at a cost of living adjustment. Uh, there's no guarantee of these things, right? As you said, it's not in law. And so it is really an ad hoc conversation with the legislature. For the local government system, it's just the Board of Trustees and really a conversation with the local governments. We've put a lot of stress on our employing agencies. So the South Carolina numbers you mentioned at 9% employer match as an example. Well, we're at 17. And the local system is a little bit less than that. So there's a lot coming out of the employing units already for these pension benefits, that you'd want to think about relieving as well. So in my view, if we can get the returns where they need to be, and we've already done that in 2025, we've had a great year in 2025, knock on wood, we
Yeah.
keep doing that. You'd want to do both. You would want to get to regular cost of living adjustments, but you'd also want to take some pressure off the employing units and get that 17 down to maybe 12 or something like that.
I was going to say, just as you mentioned earlier, the inflation, really, especially since COVID, has been so aggressive.
Yeah,
When you could buy groceries for, you know, maybe yourself and your spouse for 500 a month, maybe now it's 850 a month or whatever, and those cost of living increases aren't guaranteed. It makes it very difficult. So,
very
that's
difficult.
another thing too, from my perspective, is we as teachers, we also have to have our own self-interest in mind. That's why it is so important. I don't want to rely on government. I mean, it's great. I would love the cost of living increase, but all I can do is control the controllables with me.
Yeah,
That's why you have the Roth IRA. That's why you have the state 457 or 401k to do those things, because there is no guarantee from the government,
there is
and the
not.
laws could go back and forth and change.
And the government caused the inflation in the first place. I mean, this is the aggravating piece of all of this, is it was an unforced error. I'm an economist by trade, right, originally, and watching what happened in 2022 particularly led to inflation that hurt all of us, and it
I
didn't need to be
literally
that
got
way.
off the phone right before we talked. I
Yeah,
had a meeting with my financial advisor from Wilmington, and he said I don't know if it was $400 trillion that got pumped into the economy back during COVID. He said that has really, really hurt us, and we're seeing those effects of inflation. So it'll be interesting to see if we get that cost of living benefit. So I think that answered a lot of my pension questions.
sure,
I do want to get about 5 minutes in or so on the healthcare piece,
sure, yeah,
and then we'll kind of pause on that, and then we'll do the second episode where we talk about the investments and then issues that the teachers in North Carolina are facing today. So let's go to the healthcare piece. We know, as we mentioned multiple times, inflation has gone crazy since COVID. And to me, in a not so shocking move, we did end up raising the healthcare premiums. And this is what a
Yeah.
lot of teachers want to hear about.
Yeah.
Um, I honestly feel shocked in a way that we didn't raise the premiums earlier. Now, of course, I don't want to absorb more of a premium.
Sure.
Nobody does, but when you look at the inflation, how long did we go without a an increase to our state healthcare monthly premium payments?
8 years. And, inflation broadly over those 8 years was about 30%. So medical inflation was much more than that, of course, because it always seems to run ahead of inflation. So, rewind to last November. Uh, Won the election, was focused on the pension system and some other things. And 10 days after that, there was a state health plan offsite. And that was the first moment that it was revealed how bad the state of the finances of the state health plan was to me. We needed to find $506 million to make 2026 balance, and we needed to find 1.4 billion in total by 2027. Those numbers are so big that you kind of instantly knew you were going to have to make everybody unhappy, right? The total state budget grew year over year by $300 million. So I don't know how we could ask for 500, right? Just the math doesn't work. So first thing we did was went to the providers and said, guys, we can't pay you as much. We've got some certain programs, we're going to suspend them. And the impact of that is going to be material for you. Will you still see our patients? And they said, yes, reluctantly, but we got there with them. That was about $300 million. We went to the legislature and we asked them for $100 million, which was the biggest increase they've ever given. And they ultimately, not without a lot of back and forth, said yes to that, which left us with $100 million we needed to find. And there was only one place to go get that. And so we then, after exhausting the other options, went to the state employees and said, we're going to have to raise premiums. And we telegraphed that back in January of this year. It's been a year-long process. They will go into effect next January. Not something we wanted to do. But we still feel like the state health plan is fantastic value. If we had been keeping premiums up with wage growth over the last 8 years, nothing would have changed this year. It would have been in the same position as it was today.
Yeah, one of the interesting things of having this show is I meet teachers from all over the country. And I give my example all the time of when I'm 50 years old, this goes back to the pension. I'll have 27 physical years of teaching in, and knock on wood, hopefully I'll have a couple years of sick leave built up. So I could have 29 years of service at 50, and I could immediately start drawing on my pension, where in a lot of states, they won't allow you to even access your pension until 55 or 59. We get to access our pension early, which is a great thing.
But
And
not
it's a
while you're working,
superpower.
just to be clear.
Not while you're working. No, not while you're working, of course. No double dipping. But
Yeah,
another thing is, I've talked to teachers in different states, and they say for their family plan, like I've got my wife on my plan
yeah,
and my two kids. I think my plan going into the new change was like $598 a month for our family of
yeah,
four,
yeah.
but it wouldn't be any different if it was a family of 10, right? If I had eight kids.
Right.
But a lot of states, their pension or their healthcare, I was shocked.
Yeah.
Not all, but a lot of states, they're paying 1,500 a month, $1,000 a month. And I was really surprised because all I hear is how bad our insurance is. And
Yeah.
sure, there are plenty of states out there that have better insurance than we have, but I was shocked at how many other states are worse.
It's not just states, it's companies too. The whole healthcare ecosystem is broken. We all know that. It doesn't give you a lot of pleasure to cite the other statistics, but by comparison, they make the state health plan look really good. And we're trying to make it actually really good, which is a different challenge in bending the healthcare cost curve. One of the things we did this year is actually lowered family premiums. So
Yeah.
hopefully you noticed that. And the reason for that is what we observed is that the family premiums were so high that where anyone had a choice to not have their family on the plan, they took them off. And you end up with a smaller population, which is not great from a negotiating leverage perspective with providers. And you end up with a sicker population as well. So if we can entice people to come on the plan with lower premiums, it gives us bargaining power with providers, which allows us to get savings for everybody. And it gives us a healthier population as well. That's a good thing. So we did that. So if you're a teacher and you're making less than $90,000 a year, your premiums went down if you have your family on the plan.
Yeah, I did notice that. And again, everybody's in their own situation. I had posted that on
Yeah,
social media that I was shocked. I think my plan went down by it might have been $6 to $10. I can't remember,
yeah,
maybe $10 a month or $15 a
yeah,
month. But when you look at the first increase in 8 years and you're like, okay, here we go, get ready to absorb a blow and block
yeah,
a punch or whatever. It's like, man, mine actually went down. Now I know that wasn't everybody. Some people, theirs went up. So you said we went 8 years without raising the premiums, and obviously you've only been on the job for not even a year. What
yeah.
do you think would be the ultimate like timeline of a goal? Of course, we never want to increase premiums on the people that are teaching and whatnot, but what do you think is a healthy timeline for increases? Would you say it is once every 8 years, expect that, or would your goal to be once every 10 years? Like, how does that look? I don't even know.
No, so our goal, and we articulated this, but not broadly because it's not important yet, is that we're done with large increases. What we'd like to do is tie them to wage growth going forward, so that you have certainty that as a percentage of your paycheck, your healthcare costs are the same. And our costs, as the state health plan, go up every year. Hopefully, wages go up every year, and those two things can work together in that way, so that it's 1.25% of your paycheck or whatever it is. That's going to be what healthcare is next year, just as the same as it is this year.
But that can help from a budgetary position of knowing what
Absolutely.
percentage of your income you're paying, and hopefully that doesn't change. I haven't done much research on any of this stuff when it comes to other states, but that was kind of a shock to the system once people started seeing these different pay bands essentially
Yep.
that you were in. That if I make less than 50, this is how much make, and then 50 to 65, I'm paying this much, and it keeps going up
Yep.
all the way up to 90,000 and over. Um, how hard was it to go to a plan like that? And I know a lot of veteran teachers, I'm in my 20th year, so I'm getting paid more than somebody in their first year. And you've got kids maybe getting ready to go off to college, or maybe people that have kids in daycare. I know a lot of teachers have found that this is a really tough thing. They feel like veterans are getting punished who are making more money. How difficult of a decision was it to do this?
It's not an easy decision to raise premiums, period. And then changing the rate structure wasn't easy either. Uh, we have a lot of employees who make in the $40,000 range, who simply cannot uh, change their budget, cannot find an extra $30 a month. We're asking them for 10 though. That's hard. It's hard for everyone I know. And so, we thought this was the right thing to do because we've seen this in so many other states and certainly at the federal government level. The tax code is organized this way. Medicare is organized this way. Social Security is ultimately organized this way. That we thought it would be the most fair way to do it. But yeah, certainly I understand. The hardest part of this, it was actually the implementation, because it's the first time we've done something like this. There's some technology challenges in state government, but thankfully the team was incredibly dedicated to getting this done, and we got it across the finish line.
Yeah, big question here because there's been a lot of cloudiness on it. The new plan doesn't impact retirees though, right?
It
The
does not. Correct.
So whatever, if you're retired, whatever your numbers were last year, that doesn't change at all.
Correct.
And if
Well,
I,
we would provide free retiree healthcare. So
yeah,
that number
if
does
you
not
were hired
change.
before January 1st of 2021.
Correct. Right.
Okay.
Right.
So
Uh,
that's something to know. And then here's another thing that has been kind of cloudy is this based on your North Carolina pay scale as a teacher, or does it include local supplements
includes
and
everything.
coaching stipends and all that kind of stuff? Because I haven't seen a clear answer on that.
It includes all the local payments as well.
It does
So
include the local
what we
payments.
did to make the salary scale is look back at last year's total compensation. And what we're trying to target is kind of quartiles of income would map to the quartiles of the tiered insurance premiums. So, bottom quartile of income would be lowest premium and so on and so forth. And so it roughly maps to the salary distribution from 2024 across the state in that way.
Gotcha. Okay. So great stuff on the pension, great stuff, some answers on the healthcare. We're going to go ahead and wrap up part one. We appreciate everybody for joining us on this week's version of the Fit Educator podcast. We're going to go into part two. It'll be a little bit of a shorter part, but I want to talk about teacher investments. And then I'm going to throw you some like curveballs,
Sure.
98-mile-an-hour fastballs. And I
Just
want to
nod
talk
my
about the
head.
state of I want to talk about the state of teaching in North Carolina.
Sure.
With True, like I've met with so many teachers. I do Zoom meetings where I teach them about the pension.
Yeah,
Hundreds of teachers jump on at one time, and there are real concerns. And I know you're not in the General Assembly and you're not the governor, but I would love to hear some of your thoughts on that. So
sure.
thank you so much, and we'll see you in a minute.
All right.